The following program was provided by an independent producer solely responsible for its content. The opinions expressed do not necessarily represent the views of this station, its staff, board of directors, or underwriters.
Saving and investing can be confusing and overwhelming. We're here to break through the noise, misinformation, and confusion with easy-to-understand concepts and tools that you can put into practice right away. Whether you're a novice investor or an old pro, join Jason as he explores different topics on investing and personal finance. From 401ks to better budgeting decisions, we'll cover it all. Our investment guidance will give you the comfort and security of knowing that you're on track to achieve your goals. It's time to rise above all of the distractions of daily life and take control of your financial future. Welcome to Financially Fit with your host, Jason Haviland.
Hello, and welcome to another episode of Financially Fit with Jason Haviland. I am your host, Jason Haviland. Thank you for joining us today. Today, I'm very pleased to be joined by Rachael Bohac, who is a licensed realtor and marketing expert in all things real estate. So I'm excited to jump into the conversation with Rachael today. We'll answer your questions, we'll get into the details, and hopefully you'll walk away with some tips and tricks and ideas and thoughts about how to be engaged and sell your real estate.
Great.
So, Rachael, thank you, first of all, for being with us today. All right, so we read the newspapers and we go online and we see what the popular media is saying about everything, and we hear this term seller's market.
Yeah.
All right, that sounds good. That sounds like a good thing if you're a seller. Yeah. Talk to us a little bit about what a seller's market is, what does it mean, sort of who's it good for, and then let's talk a little bit about the implications of it being a seller's market if you're not a seller.
That's right. Sure. I mean, when you think about what is a seller's market, I mean, it's termed that because it is the benefit of the seller, right? There's a supply shortage where the supply and the demand are not matching. Therefore, sellers are getting the benefit. There's just not enough homes to go around on the market. So traditionally in New Hampshire, there's about a 6-month inventory. We're cutting that down by as much as 3 months right now. So, and that might seem like maybe a long period of time to people. But if you, are in the industry for a while, you know that is significant, the impact on how fast homes are selling right now.
All right, so the impact, when we say seller's market, that means the speed with which the property can sell, and then the price as well. Are you noticing not only are they selling fast, but are we in one of these situations where it's selling, there's bidding wars and sort of people sort of immediately snapping up properties?
Yeah. What it does is it makes hard to sell homes easier to sell. Let's just take, main roads or properties that need repair. Those are selling regardless.
Okay.
But then you take a house that's highly desirable, and that's when you're finding bidding wars, people going, significantly over asking price, throwing in sweetheart deals for sellers like no inspections or, allowing them to stay in the property for longer periods of time.
Okay.
So there's a lot of different ways that it's benefiting sellers right now.
All right. And do you have, what are your insights or thoughts on why, what has changed or what's developed to sort of get us in a situation where the conditions are so advantageous for sellers?
It's interesting. I think, it's an overall market adjustment from the bubble that burst and, starting in 2008, where inventory, not inventory, but prices dropped dramatically.
All assets,
exactly.
Prices cratered.
So it's a rebound from that. It's that kind of effect. And based on kind of research and what the industry is talking about is lots of investors scooped up property during that time.
Yeah.
And it's also, as it's a seller's market, it's really great for the rental market where the vacancy rates are very low.
Right.
So landlords have no reason to be selling off these investment properties. And you're talking about single families and multifamilies.
Because they can get so much more in the rent.
The rent is high, right? Because the vacancy is low, therefore they can charge higher rents. And they bought the asset at such a small, low price 10 years ago, let's say at this point, and they have no real desire to liquidate. So that's really kind of limiting the inventory that's being pushed back out into the market. That and kind of steady, job growth and steady
The economic conditions,
exactly.
GDP growth.
Yep, all of
employers.
that. It's beneficial to everybody, but not everybody feels as though they have the next step up house to go to. And it's kind of creating this crunch in the market where not everybody is feeling comfortable and confident moving forward. So everyone's a little bit slower to put their house on the market, especially at that entry-level house. The $200,000, $250,000. Those are the ones that are becoming hardest to come by.
Okay. All right. So you mentioned the word bubble, and we all had, many of us that were around and working in 2008 remember that all asset classes really collapsed.
Yeah.
What are you feeling, sensing, seeing in the data? Are we headed for another bubble now?
So we spent a lot of time talking about that. So prices let's just look back a little bit at 2017. It was the biggest year in residential real estate that New Hampshire's ever had. It was just under 18,000 houses sold. In Hillsborough County, the average sales price went up to about $270,000 for a single family house. Yep. Prices went up around 4 to 5%.
That was in 2017.
That was 2017.
Okay.
They're expecting a similar year.
Okay.
So another 4-ish to 5%. Some are much more modest, saying only 1 to 2%. But pretty much all resources agree that prices are going to continue to increase in 2018.
Okay.
Along with interest rates, but that's a side story.
Yep. We'll have another financially fit on interest rates. We'll stay on real estate today.
But nonetheless, back to.
Is it a bubble? Right.
Oh, is it a bubble?
Is it a bubble? Is it
all the
more
indicators,
froth than 18?
No, I mean, all the indicators are saying that it's really not, right? There's many financial indicators that go into, is this a bubble? Is it sustainable? And one of the ones that we really look at closely in the real estate industry is the affordability index. Okay. And back when the last bubble burst, the affordability index was at 25-ish%. At the lowest point where people started gobbling everything up, the affordability index was about 11%. We're only at about 18% right now. So there's really a lot more room in the affordability index to say that, this is a sustainable growth. And really it's kind of just rebuilding and bringing prices back up to where they would have been naturally if there wasn't
a big
such
crater and then a
exactly.
re-rise. All right. So is it also the case that we see those differences in the sort of the frothiness, the bubbliness, or the hotness of the market in regional differences? Are some sort of cities, towns, locations in the state more? So here in Nashua, tell us a little bit about what do you see in Nashua and some of the surrounding communities here?
What's great about Nashua is there are a lot of entry-level houses, okay? So that is a good thing. And it's pushing the limit from the 225s, pushing it over the $250,000 mark. And people, they need to be careful that they don't buy with too much emotion, you know, but at the same time, everybody needs a place to live. So you kind of have to weigh out everything that's going on in every situation. You don't want to just, throw an extra $10,000 at a property. But then again, it's a 30-year investment. It's somewhere you're going to be living for a long period of time. So sometimes putting a little bit more in up front isn't going to break you over a long period of time if you know you're going to be pretty settled in an area. So Nashua, Manchester, our cities are always a safe bet. There's always going to be people who want to be living in those areas for work. So there's not as high a risk in those types of areas. I will say that some of the surrounding, more desirable or kind of higher end towns, your Hollis, your Bedford, et cetera, people are going significantly over asking price. But you're looking at luxury houses, and so the percentage-wise that they're going over isn't, as significant.
The absolute dollars are high, but the percentage still not as ridiculous.
And to be honest, I mean, again, it kind of goes back to what is the condition of the house that we're talking about. And sometimes the condition, if you're selling, a house that's been very well taken care of or something that's relatively new construction, people are going to be paying top dollar for that.
Okay. And I suspect, from what I've heard, this is also, this is not just contained to New Hampshire. This is happening in many markets, certainly Boston, in Massachusetts, potentially even more growth and higher price. So it's not a local phenomenon.
Yeah, and New England is a hotbed. We look at this on a national level just to make sure that we're not, an isolated, region of the country. But kind of the coasts, both coasts, if you will, are very hot in the growth. And I think, especially just because they're very developed and there's only so much land, right? There's only so much land. New construction is so expensive that it makes existing home sales kind of that much more desirable. So, New Hampshire, and I think that we get the overflow from people moving north from Massachusetts. Yep. It is more affordable. I'm licensed in Massachusetts as well, and you are getting a substantially, better quality, larger home in New Hampshire than you are in Massachusetts for the same price.
Yep.
So it makes New Hampshire particularly busy.
Yes. All right. So great. That all sounds great if you're selling, right?
Yes.
If you're now an empty nester and you want to downsize, perhaps you want to move to Florida, something like that. But if you're a new family looking for your first house, or you've already purchased your first house, maybe you want to upgrade a house.
Yeah.
You're actually buying into this market, it's probably a little bit more difficult. What are some of the tools, tips, strategies you have when trying to weigh the issue of, all right, this house that I'm about to buy is seems like it's a lot of money.
Yeah.
Now, I'll get a little bit more for the house I'm selling. That can be good if you're selling, but if it's your first house or you're trying to make a big jump, prices are very high.
Yeah, so there's a lot of strategies for buyers. The very, very first thing is your finances. You got to get your finances in order, and that's in my line of work, that's as simple as getting a pre-approval for your mortgage, right? So that's, typically a 15-minute phone conversation or in person, depending on your personality type and, what kind of service.
So you should do that before you even start the process?
Absolutely.
Don't find the house first and then go figure out how you're going to pay for it.
Don't go fall in love with the house, because it'll be gone before you get your pre-approval.
All right, so get the pre-approval, and we have a Financially Fit with a mortgage broker coming up, so stay tuned for that. We'll cover that topic, but you want to do that before?
Absolutely.
All right, you find the house. So you're pre-approved for the mortgage. What else? What else is on like that buyer's, that you can do in this market, knowing that it's going to be a steep
And
price.
everybody's scenario is a little bit different, right? So some people are renting right now, and this is going to be their first house. So let's take that person, for instance. What you want to do is you want to be within kind of the tail end of your lease, if that's an issue for you, or out of lease on a month-to-month situation, so that you have the flexibility to move. A seller isn't going to wait 6 months for you to get out of your lease, or you could be potentially looking at a penalty. So keep that in mind. So your flexibility is important, and that's like the key to everything, is your flexibility, right? Because you're going to be the one kind of jumping through hoops, right? Whether it's price, showing times, etc. It is the seller's say in this type of market. And then once you have your pre-approval and you know what you feel comfortable with, and those are two different things, like what you might be approved for and what you actually want to pay. Make sure you get the right number for you, because you might be approved for $300, but what you hear as your monthly payment, you say, well, let's dial that back and bring it back to maybe $250,000, so that you go out and look at the appropriate house for yourself and don't fall in love with something that you're not going to feel comfortable with. From there, it's very closely watching the market. It's working with a realtor, getting out and looking at inventory. And you're not going to know until you really start getting out there and looking at stuff. And, that's what we're here for, is to make sure that you feel comfortable answering all your questions. And you're going to have to move fast.
All right, so that's one practical thing, right? So it's like, all right, you got to get pre-approved. I like the, there's certainly some value added working with a realtor who can sort of know the market, know what's coming, sort of recent transactions. Here's what it's going to take. And you got to be a decider.
But that's part of the getting out there and looking at things. So whether you go to a lot of open houses just to kind of see what your budget buys you, just to kind of look around and see what's out there, so that when you do get to the house that you really want and it's the first day on the market, you're ready to put in an offer. And it truly is that fast in a lot of situations. So really being decisive and being ready to do that. Other things that can help is larger deposits. When you're looking to put in an offer.
Why does that? Does that signal I'm more, why does a $20,000 deposit versus a $2,000 deposit signal I'm more serious?
Well, it's a couple things.
I'm more interesting for you as a
and it is
as a buyer of your
definitely kind of denotes seriousness, but also your financial capability, right?
Okay.
Because one of the contingencies in almost every contract is financing. So if you have a large amount to put down, that's going to make a seller feel more comfortable that you're going to be able to make it to the end zone, right? Right. You're going to be able to get, and you're not going to fall back on your finance contingency a week before the closing, and that seller's going to have to put it back on the market.
Start over.
So, you know, especially, you know, at an entry level, you know, home, you're not going to need to put down $20,000. And I wouldn't necessarily advise it either, because it does put your money at risk, you know, if something falls apart. However, a stronger deposit like $5,000, you know, that type of situation will make a seller feel more comfortable. However, I help plenty of people who, you know, are, you know, only putting down 3% in the whole transaction and don't have a lot of money toward their closing costs, still get into a home that they really love. Yeah. You're just going to have to be more patient.
Right.
So, you know, a deposit is a type of strategy, you know, there's just...
All right, so talk about the bid over asking, right? So if I walk into a house and I know I'm sitting there and I love it, like, do I have to be prepared to do that? Or, you know, again, is that part of like what you can help advise?
Yes.
Say, look, like, hey, like this one you're gonna have to do over asking, or this one, nope, I think
so
asking is the right strategy.
Something that's actually new in our MLS system this year, or in the last 12 months.
A little jargon there. What's MLS?
Multiple listing service.
Okay, what is that, and what is that?
It is where realtors load in listings so that it kind of pushes out to all the different apps and websites out there. So
it's like the central clearing place of all the properties.
Exactly.
Okay.
So one of the tools now is called a delayed showing. And what this is doing is causing more demand on single properties. So for instance, they'll put something in MLS and it shows up on all of the websites and apps on like a Tuesday, but they're not going to have any showings until Sunday. So that creates a feeding frenzy.
Pent-up demand, right? So everyone sees it. You can't just rush in and...
You can't be the first person in the door no matter how much you beg. You can't be, you know, the first bid that comes in the night that it goes on the market. They force everybody to wait until, you know, a Saturday or a Sunday. They push everybody through an open house and then collect offers. Yep. And so they're calling for highest and best offers right out of the gate. So you know exactly when the offers are due by, and you have to get in your highest and best offer by a certain time.
Okay.
And what I'd just like to say is, not every situation is like this. So I don't want everybody to feel like, oh my God, it's impossible. Forget it. I'm not even going to try. I'm going to rent forever. I mean, I'm just giving you kind of what the climate can be.
The current climate.
It is definitely happening, but it's not necessarily for a buyer to be in kind of panic mode. You know, let a realtor help you with the strategy.
Okay.
So all that being said, when it comes to putting in an offer in a multiple offer situation, is you do have to put your best foot forward. If you are a homeowner and you're buying like kind of your next house, your step-up house, you're probably going to want to make sure that's already under contract. They might not even consider your offer if your home is even under agreement.
You selling your house before you can buy their house.
So oftentimes if you have nothing to sell, that's going to be a benefit.
That can be an advantage.
Absolutely. So you might not have to go way over the asking price. You could be maybe closer to asking price because you have nothing to sell, and that's more desirable. Of course, cash is always king, you know, a straight cash offer, or the more you can put down. If you're only putting down, you know, 50% and only financing 50%, that's better. So highest and best means a lot of things. It doesn't just mean like, give me some crazy astronomical price over the list price. It means like, what is the best offer for the seller? What gives them the lowest risk of this falling apart?
So how often does it happen where if you've done the pre-approval, right? So if you've done the mortgage, you've done the pre-approval, and they say $300,000, you're good for, like, how often is it that, you know, oops, we made a mistake, we forgot to look into something, or some document that we were checking, like, does that happen often, or?
It does happen, and oftentimes it just creates a fire drill where it's a problem, but we're able to put out the fire before the closing. So it is rare, you know, that something is just going to be completely gone, right? But then again, sometimes people lose their job, and that, if you don't have a job, you're not closing, you know? So oftentimes it's not an issue. But it is rare, and it is a contingency to protect the buyer and to protect the buyer's deposit. Therefore, it is some risk at some level to a seller.
Right.
So it's not frequent.
All right, let's get into a couple of the financial topics here.
Okay.
We're financially fit. So if you're a seller, sort of understanding all that, why wouldn't your strategy be, well, I should just price this thing so high that, like, you know, just so you know, like, all right, I should price it so high that if I get like one offer or no offers, then I've probably done it right? If you put it out there and you get, you know, 10 offers immediately, haven't you priced it too low?
Well, you got to keep in mind that the majority of people are going to be using financing. They're going to get a mortgage. Well, every mortgage company is going to get an appraisal. Yep. And it has to be within the realm of reality, right?
Okay,
an appraiser's
so you can't make a $600,000 price on a $300,000. No one's going to let somebody...
Nobody's even going to look at it, right? Because everybody is, for the most part, keeping their sanity. You know, we're not trying to create a bubble that's going to burst.
Right.
We want to get the most for the seller, and actually, competition is best, right? I'd rather get, you know, let's just talk about a $300,000 house. Yeah. Even if we could maybe push it to $315,000 and, you know, only get one offer, but what if that one offer only is putting down 5% and, you know, they have another house to sell and there's 6 other contingencies in there. But if at $300,000, that actually brings me 6 offers and one of them has nothing to sell and 50% down, that's a better transaction for my seller. So you
have a higher confidence that it goes through, it potentially goes through more quickly.
And the competition could drive up the price to a healthy spot that you know is going to appraise out and it's not going to ruffle the feathers halfway through a transaction if you don't get the right appraised value.
Okay. All right, so that's on the seller side. On the buyer side, so clearly there's the purchase price. What are some of the other costs, sort of in your mind, that buyers might typically overlook when they're trying to decide, should I buy this property or just, you know, buying real estate in general?
There's a couple of hard costs that come up during the transaction. The first is your deposit, right? So you're going to put down some form of deposit saying, I'm moving forward and buying this house. Please take it off the market. And you know, at an entry-level house, that might be $1,000 to $2,000. At kind of a second-tier house, it's maybe $5,000, so on and so forth. So you have to write that check at the time that you sign the contract. Right. And that money gets put in an escrow account. And basically that just means we're going to apply that to the purchase price at the closing. But that money's out of your bank account until the closing. The other 2 costs that definitely come up are a home inspection and an appraisal. Right. So short answer on appraisal, ballpark $500, right? Give or take $100 depending on size of the property, et cetera.
Is that something I'm responsible as the buyer
As the buyer, you're not going to hire an appraiser. The mortgage company is going to hire an appraiser on your behalf, but you are going to pay that money during the home buying process, and whether or not it closes or not.
Okay.
Okay.
So you got to be.
It's a hard cost.
And do you, as the individual, again, arrange through the mortgage company, do you have any choice where you can say, look, you're using Joe's appraisal, I want to use Sally's appraisal?
Nope, and that's kind of the beauty of why it's designed that way, to be honest with you, is, you know, appraisers are licensed, and mortgage company is going to have a roster of them, and they go through a rotation, and nobody's picking what appraiser goes where, because that's kind of how we got into the problem with the bubble the last time. Right? Because it was like, hey, you know, wink, wink, nudge, nudge. Yeah, exactly. So we're avoiding that now. Okay. Where were we?
So the buyers, what else is on their costs that they might not have overlooked, or something that
the
they
last thing, and it's actually
be aware of?
Quite varied, is a home inspection.
Right.
So you can take like a average home inspection that might cost you $500, but then you want to do a septic test, maybe that's $250. Maybe you want to do a water test, that's $100. You want to do a radon air test, that's $100. So you could easily walk out of an inspection with $1,000 price tag. Money well spent, frankly.
Right, because you get to understand everything that's potentially an issue in your house.
You're going to spend a few hours there with a licensed home inspector. You're going to know everything about the house. You're going to know future maintenance plans that you want to keep up with. But if there's something major, or if there's a water issue, or there's a radon issue, you want to know now, right? So, because that protects you. That is a contingency that you can say, I no longer want to move forward. So, it seems like a big price tag, but it's a small investment when you think about, okay, I'm going to spend $300,000 on a house. Right. I'd like to know if there's, some major issues.
Okay. All right. So so you got to make sure you got the inspection, the appraisal, which we'll have some costs, you'll have
Yeah.
your deposit, and then, of course, the mortgage, and then all the moving costs. There's a lot of other things there.
Yes, yeah, but
sounds
that's
like we've hit some
during
of
the
the biggies.
process. That's where you're going to be getting out your checkbook, and then of course at the closing table, you'll be writing your final check for the rest of your down payment and any closing costs.
Okay. All right. So, all that said,
Mm-hmm.
does it make sense to, like, we see a lot of these auctions, right,
Mm-hmm.
and foreclosures, and you always hear about these people, I go to the foreclosure auctions and I buy these things and I flip them and I make all
Yeah.
this money. Is it a good idea to go buy a house from an auction? Is that an option?
It's an option if you have nothing but free time on your hands.
Have you ever been to one? What are they
I
like?
have,
What
I
are they, so
have.
what are they like?
They truly, and you know what, again, if this is kind of the spirit that you want to go with, sure, I can help you with some resources of where to find the auctions, where they're listed. Generally speaking, it's best for an investor, right? This is where they spend their time. They don't mind driving all over the state to auctions where frequently you show up and they auction off the property and they sell it back to the bank because, it's over, meaning they owe more than the value of the house.
Right.
So then you've invested what? The research time, the driving time, the standing time, then the driving back time for something that didn't even get sold.
You didn't even get it.
There are resources, and I know everybody loves Zillow because this is pre-foreclosure, this is this. That person's not ready to sell the house. And I would just say for the average consumer, look at the houses that are actually on the market. That's a
Right.
ready, willing, and able seller who's ready to move forward and wants to make a deal with you.
Right.
So, I mean, and there's also, there's certainly bank-owned properties that are in MLS, so you can get a deal on that. There's ones that are distressed, and there's rehab loans that people can, that are available to everybody.
So there's cheap stuff. You don't have to go to an
You-
auction
yeah,
to
you
get
don't have to
something.
drive all
if you want
around
a
the
fixer-upper,
state.
you can
Exactly,
just
yeah.
talk, hey, Rachel, give me a fixer-upper.
Exactly.
You can find a fixer-upper.
Yes, there's deals to be had that are in MLS, and I just wouldn't advise the average consumer to be driving all over the world looking for the right auction.
Okay. All right. One more topic. So you can find fixer-uppers on MLS, things like that. You can find a lot of things on the internet these days, right?
Yeah.
And you can try to sell your house by yourself. What are some of the risks people face if they were going to try to, I want to do this myself. I'll take my photos myself. I'll do all this work myself.
Yeah.
What are some of the risks people face doing that?
You know what? I'm just going to boil it down to this. The statistics are in that if you sell your house on your own, you will net less money than if you use a licensed professional. And that's going to be due to negotiations. That's going to be the type of people who are specifically looking for sale by owner homes. Just the statistics have shown that when you try to sell it on your own, you're going to net less even after paying a realtor their commission.
Because you don't price it right.
You don't price it right.
You don't take into account those things that we talked about on the deposit. What do I take? What do I?
And you know what? And frankly, you probably don't have the time. And can you imagine you put your house on the market and you get 30 phone calls the first day?
Right.
Most people have a job. They're not going to be able to sustain that kind of, influx and busyness in their day.
Right. So working with an agent, lots of all the benefits we talked about,
Right.
and then plus helps lower your risk.
Right.
Well, thank you very much. That was a
thanks for having me.
wide-ranging
Yeah.
conversation today. We hopefully answered a lot of your questions about real estate, buying real estate, the market, the seller's market, all the frothiness we have. So thank you, Rachel, for joining us today. And thank you for joining me on Financially Fit with Jason Haviland. We'll see you next time. Take care.
Saving and investing can be confusing and overwhelming. We're here to break through the noise, misinformation, and confusion with easy-to-understand concepts and tools that you can put into practice right away. Whether you're a novice investor or an old pro, join Jason as he explores different topics on investing and personal finance. From 401ks to better budgeting decisions, we'll cover it all. Our investment guidance will give you the comfort and security of knowing that you're on track to achieve your goals. It's time to rise above all of the distractions of daily life and take control of your financial future. Welcome to Financially Fit with your host, Jason Haviland.
The preceding program was provided by an independent producer solely responsible for its content. The opinions expressed do not necessarily represent the views of this station, its staff, board of directors, or underwriters.